Hi, I'm Steve LaFrance and welcome to our mid-year market update. After a rocky start to 2025, the stock market came roaring back in the second quarter. The S&P climbed over 6% through mid-year, shaking off a steep dip earlier in the year. What happened? Tariffs dominated headlines. Earlier policy changes rattled investors, but by May, a US-China deal cooled tensions. Though legal battles and upcoming deadlines still cloud the outlook. In the rush to beat tariff hikes, businesses and consumers front-loaded purchases, especially vehicles. That temporary surge boosted early economic data, but also sparked inflation concerns. Interestingly, while inflation expectations rose sharply in surveys, actual CPI data stayed tame. The Fed held interest rates steady, signaling caution over the lag effects of both implemented and delayed tariffs, while markets now expect gradual rate cuts starting this fall. The real market driver, sentiment. Investors initially panicked, shrinking price-to-earnings multiples, but regained confidence by June, pushing valuations back to 22 times forward earnings. Stock leadership also shifted. In Q1, defensive sectors shined, but lagged in Q2 as investors rotated back towards riskier sectors. Growth, tech, and small caps took the wheel, especially the Magnificent Seven, bouncing back over 20% after falling nearly 16% in Q1. International equities continued outperforming US stocks for a second straight quarter, aided by a weaker dollar and policy rotation. The international index is now up over 20% year-to-date, while emerging markets is up 16.4%. Credit markets stabilized, with high-yield bonds rebounding in the second quarter as confidence improved. Corporate and high-yield bonds are now up between 4.5% to 5% for the year. So what's the takeaway for investors? Don't get swept up in the volatility. Stick to your long-term plan, stay diversified, and focus on what you can control. Because while headlines shift fast, discipline wins over time. That's all for now. Thanks again for your trust and confidence.